Hey traders, welcome to Charts and Coffee. Should be good to go. We have a free trading room in here. We got our YouTube folks. Great to see everyone. All right. Happy Tuesday, everybody. Great to have you here. Let's get started. We have an interesting little reaction to, well, if you take a look here, let me show you a couple things. If you take a look at the way in which Tuesday, let's think about Tuesday as more than just 9:30 to 4. Let's think about Tuesday in terms of our trading, especially for the indices, energies, metals, treasuries, currencies, as more of a global psychology. We can see a lot of support here around 2 a.m. That's when the European session opens. And then we have another retest shortly after the Asian session closes. And it looks like when we have been moving lower, the hourly price movement range zones have fairly successfully caught support, which means we are working within sort of normal volatility parameters, because those zones, the red and the green, they're being plotted based on a historical volatility. And as long as we're trading within those, we're probably in good shape in terms of, not that we're moving higher or lower. Good shape isn't a bullish or bearish. Good and bad isn't bullish and bearish. It's rather, is the market working within our familiar patterns and structure? And that means we have a higher probability, a higher predictability for what we think is going to happen next. That's it. Probability, not what's going to happen. We focus on probabilities. We're aware of the possibilities, but we don't ever think that we can predict. That's trading. Good to see you. I'll see you tomorrow. No, I'm kidding. So that's where we're at, gang. That's where we're at. So let's go ahead and jump into your questions. And of course, we are going to be opening up higher than yesterday's close. Let's also remember where we're sitting on the daily time frame. If you take a look at where we are, you'll notice that, see that support level back from June 16, June 17. That's a Darvis level there, gang. That's a Darvis level. And it was previous support. The reason Darvis and the kind of support and resistance that I like to focus on is based on previous support and resistance, not projected support and resistance, is because I want to see whether or not there was a reaction there before, not presuming there's going to be a reaction there in the future, but rather what happened last time we were there? Was there even a reaction? And what was the reaction? Do we stall? Do we reverse? Or do we accelerate? And with the previous levels being the key to support and resistance, we have a little bit different probability. It's a whole lot easier to say it's more probable that we could bounce or react to a level that we have before than presuming that we will going forward. So again, think about how your support and resistance levels are being put on your chart. Number one, are they automated? Because this day and age, it's quite easy to have these things automated based on your psychology of the market. My psychology of the market is what happened before, right? And you can see what's happened before seems to be triggering a very familiar reaction. Another thing that I will say that I'm watching is that the last time we were closing in on a -2 standard deviation, and that would have also been back in the end of June, we had a little bit of a bounce. It's not the end all be all support. The end all be all support's a little bit lower. And if we were to test the V-score lows of, say, mid-June, that'd be a different conversation. But there is a potential volume-derived level of support that we're dealing with. All right, so let's get to the questions. And first up, hey there, Kelvin. Thoughts on a small bullish position in natural gas. Sure. So before I head on over to UNG, I'll take a look at NG, right? So before I make a decision on what I'm going to do with the ETF that trades based upon the futures contract, I'll look at the futures contract first, right? Okay. With that being said, what we have here, 200 propulsion, neutral market, which is really important, and a minor low, which frankly, to your point, Kelvin, I would like to see this retested and broken through yesterday's high, 697. I'd like to see 697 broken after 9:30. That tells me that we've got Wall Street participation. We've got basically New York participating. And then at that point, yes, I think UNG is perfectly fine, right? Minor low on the natural gas contract, then triggering possibly a 200 propulsion, 200 exponential moving average propulsion long position. Yes, I don't have a problem with that whatsoever. If this were a downtrend, however, Kelvin, that would be no. But since it's neutral, overbought and oversold is a valid consideration. This would be then oversold. All right. Take a look at your slow stochastic as well. You'll notice the slow stochastic. And one really easy thing you can do, and I believe I've shared this with most of you all in the rooms. Here, let me do this. See this right here? That's the reading of a 21K slow stochastic, 2080. So the slow stochastic that I've taught you all to put on the chart, if you like, that overbought, oversold from a slow stochastic, that's the reading, 7. Anything under 20 is oversold. So I don't have to have the secret squiggle of the stochastic, the MACD, or the CCI on my screen. I can put my multi-trend, I can put my V-score down there at the bottom, save that real estate for those tools, and then put the CCI, the MACD, and the slow stochastic very conveniently, compactly in a label. So take a look. That is oversold. So good stuff. All right, next up is, what are my thoughts on energy? XLE. XLE. Neutral. We are neutral on the daily time frame. We could day trade it. We're going to inherit an uptrend on the 5-minute chart. So when I head on over into the futures room and my sector secrets mastery folks, we're going to be day trading. This could be one to look at where we are inheriting potentially a trend, an uptrend as we start today. We're below the 200. So I guess my question, Coop, would be, is Exxon, right? Is Exxon here? I like Exxon a little bit better. Coop, take a look at Exxon. Take a look at Chevron. I like Exxon. Why would I go Exxon Chevron on a question about XLE? Exxon is the relative outperformer in terms of the fact that it is still above or at that 200, unlike XLE. So Coop, yes, but let's go with a boat over the tide. All right. Next up is, hey there, editor. The storm is big. I'm thinking of those of you all that are in Tampa. I know we have members on the West Coast of the state. And yeah, Ian is a beast. It's big. It's a Cat 3. It's going through some warm Gulf waters. That's very shallow, warm water on the West Coast as opposed to, the East Coast where I'm at. So yeah, definitely thinking of you all. This thing is big enough where I don't know there's anybody in Florida who's not going to feel something. But luckily, knock on wood, those of you that are on the West Coast, yeah, stay safe. We were on the heel of a new moon. So yeah, that storm surge is going to be something. So definitely thinking of you all. Luckily, I think we're going to have a lot of wind and a lot of rain. I think we're on the dirty corner of the storm. But no, I appreciate that, and definitely thinking of a lot of you. Now, I'll tell you what, before the lights go out, I always think about when we lose power, when we lose internet, what's my last trade? We call that as the lights go out. Oil rigs are going to be disrupted, probably you might see a quick pop in crude. So you know your rigs. If this were jogging further west and north, we'd see possibly refineries and RBOB also affected. So a lot of folks ask, Rob, you always talk about that last trade before the lights go out. I'm already long NEE. I'm already long GNRC. NEE may not be a bad spot right where it's at the 200 on the daily. And Generac GNRC is definitely going to be something we can keep an eye on. Likely get a bounce, but I can't tell you that GNRC, because the storm is a valid buy, the structure of it is not what I want. But NEE could be interesting. Gang, the storm's bearing down on where generally where I live. I'm still going to be opportunistic, right? That is my job. Where is the opportunity? Where's the volatility? Even when it's a storm bearing down on my state. So I appreciate that, editor. I definitely want to stay safe, but I also want to look at where's the opportunity, because I'll tell you what, last time I think it was Wilma went through, we had about 4 days without power, which isn't a lot considering my father-in-law was out for 3 weeks. But it's so great to know that I had some really solid trades that I put on before the internet went out. Tell you what, it does make sitting through no air conditioning and no power and your refrigerator, and your freezer getting warm and defrosting. It sure does feel better knowing you got a decent trade or two on. Well, us traders think differently, don't we? All right, next up, selling off the market before she's on. No questions. Thank you for everything. I don't know that I see a lot of selling off in the indices right now, my friend. Intraday, right? Overall, I'm not going to gauge it. So it's really interesting. I'm not going to gauge what we've done this morning based on what we've done since roughly 8:45. I'm going to gauge this market by a little bit more of a total look of what have we done since 2 a.m. Eastern. We've been chopping around, haven't we? And notice we have some very distinct support and resistance levels that we can take a look at. If come 9:30, after 9:30, that can sync up with V-score, slow stow, HPMR, we're in business, right? We're in business. So let's see what happens. All right. Next up, PP family. Should we consider this a double bottom? No, I cannot. Because the market structure, it's not that this level on the indices is guaranteed to be broken. No guarantees, right? However, because we have started to go a little bit double red, I have to at least be open to the fact that this is a very new downtrend. Price-wise, yes. Price-wise, yes. If you look at the Darvis level there, look at that purple line. This is why I love to automate these tools. I don't have to guess at where support and resistance is. My bias for what I want to see won't be a factor. You can see that Darvis level there. Another thing that I'm looking at is from a volume perspective, when's the last time we were in this area? And the last time we were in this area from a volume perspective was back in June. And, I can't say that I love the structure here where I could say, yes, confidently, let's get long. I really can't. However, we are getting a minor low break. If we can take out yesterday's high, 37.30 and a half, after 9:30, that could be a minor low, near-term minor low opportunity. You know what I prefer to do, especially since it's the end of the quarter, end of the month, GDP, PCE, and as I mentioned, I think on Sunday and then also yesterday, we have a Fed member speaking, almost every day. We have some Fed member speaking almost every single day. So far, Powell did not really upend the market, which is really interesting. So treat it as a double bottom, maybe. Watch the S&P minor low, and then that could map to SPX. Sure. Remember, SPX, SPY futures, MES, the micro, options on SPX, options on SPY, options on the ES futures, mini contracts. For me, those are all going to be built on the ES. Now, we are in early stages testing HPMRs on the SPX. A lot of you said, Rog, if you were, how would you use the hourly price movement ranges on the SPX? How would you use your tools on the SPX? So yeah, we're in the process of setting those up on the SPX so we can have those hourly price movement ranges. Oh, and I just kind of broke my toss. Okay, no big deal. But those are things, yes, that the Lorna bot is working on right now. Yeah, and so for those of you wondering, if you already have the premium subscription of the hourly price movement range, when these have gone through testing, and I imagine, bot, what do you think? I'm thinking about maybe a few more weeks at most. So I'm not sure. I'm not going to put a date because bots could be like, no, we don't have a date, but it is in the works. And we just want to make sure they're working in a way that is consistent and accurate. But once we get that down, and she's testing it already, we have been testing it for about a week or two. We're just going to use that same process and put it on the SPX. And then we'll add that symbol to the premium. And those of you that have the premium HPMRs, you've noticed that we do update not only the zones, but we update the list of symbols that we are running the hourly price movement ranges on as well. And yes, SPX is going to be available. I'm going to go out on a limb and say by the beginning of October. So, which is right around the corner. All right, next up is CGC dead. Hey there, Sue. Well, let's look. I mean, until it's delisted, right? Until anything's delisted, Canopy. I don't have any skin in the game here. I don't. But I will tell you, if Canopy goes back and retests, say $2, $2.12, there's a Darvas there, and we're in a neutral environment. I can't say it's dead. Anytime we're talking about a stock under $10, to me, it's less about price and more about volume. So if you're looking at CGC, you've got to make sure, Sue, none of us can be alone in our trades. The reason our trades work is that we're all thinking more or less in a similar zone and directionally where everything gets going. I can't surf a ripple, right? And a lot of times traders want to be there first. I think there's a lot less validity and usefulness to being there first, as opposed to being there when the sentiment is in the early stages of building, when the momentum's in the early stages of building, or we have a support level that we've seen has held before, or is a good, robust support level. In this case, Sue, go with volume. Yeah, go with volume. That's what I would focus on there. Yeah. If you can find a point of control for the year, that would be, or the low, the zone between the point of control for the year, the low could be really interesting. Could be really interesting. Okay. Our next question is, does a hurricane have an effect on insurance stocks? Take a look at KIE. Take a look at KIE, which has already been heading lower anyway. Joe, yeah, take a look at KIE. I would definitely keep an eye on that, and then crack that thing open, because KIE I don't believe is terribly liquid in terms of the options chain, but you could find some individual stocks in there with good structure. And then last question here. Hey there, Rachel. We take a look at BCLI. Yeah, I always say, when folks say thanks, I always say, you know what, it's my job and it's my pleasure. But it is my job. And work ethic is a thing, right? And I appreciate y'all coming out and watching. So BCLI, same thing. Rachel, volume. Find those volume levels. Squeeze in the year. Find those volume levels. This is volume profile. This is not time or date-based volume. This is where is the size. Take a look for the year. 375. Take a look at that area, around 375, 380, Rachel. Keep an eye on that. That's your 2022 point of control. So I hope that makes sense. All right, gang. I will talk with you all tomorrow, same time, same station. Thanks as always for being a part of the Caffeinate and Dominate crew. My Sector Secrets Mastery folks, my futures folks. I'll see you in the room in just a moment. Be good to each other, gang.